It's a busy week on Wall Street as companies release their latest earnings reports. Stocks were up at the opening bell this morning. Microsoft and Facebook's parent company Meta beat expectations despite concerns about the economy. This is relieving concerns that investors would lose their appetite for artificial intelligence-driven growth. Later today, Apple and Amazon are also set to release their earnings reports. Let's bring in Joy Wiltermuth. She is a news editor and senior markets reporter for MarketWatch. Joy, thanks for being here. What's your take on these earnings reports and the market response?
Well, it has been the lift that people were hoping would happen. The Mag 7, the big tech stocks, they had been responsible for a lot of the gains in the S&P 500 when we were at peak levels. And then it had just been a cruel sort of selling that we've seen more recently. And so providing good earnings, positive earnings has really been a huge lift here today for stocks and beyond. And there's more to come. So investors are highly focused on that for right now. That doesn't mean they're not focused on tariffs, but right now it's really about tech.
Why are their earnings better than expected?
Well, the big tech companies should, in theory, be more insulated from the negative ramifications of tariffs once we know what they are, if they are, the costs of it. They have sort of been this haven trade along the way when there was concerns about the economies. You know, they've got huge cash bills and a cash buffer. So really sort of the go-to for investors for quite a while until recently, when you had seen some of the slump and questions about all the spending on CapEx to build out the artificial intelligence sort of trade and be competitive. And of course, the DeepSeek challenging sort of investors' idea about, is it a good idea to be spending such a tremendous amount of money so to sort of, you know, build out AI when it potentially can be done cheaper. So that had also helped drag down the stocks in general over the last couple months.
Fed Chair Jerome Powell has been warning about potential effects of tariff policies. We know the president has been very vocal about wanting the Fed to cut rates. Now we're hearing Treasury Secretary Scott Bessent join in. What is Bessent's reasoning, and does the Fed agree?
Well, Fed Chair Powell has said that it's an independent branch. They're going to do what they're going to do, and their mandate is to keep tabs on the employment number and inflation. And they've said, I have to keep an eye on where these tariffs shake out, you know, before we can really make moves on cutting rates, because you wouldn't want to cut rates if there is sort of an inflationary surge or bump up that looks like it's going to be hard to contain again. He's been down that route already during the pandemic, and that is something that he wants to avoid. So he's just said he's been patient. The White House can say that they want rate cuts or they want lower rates, but Powell for now has said patience, and he's expected to stay patient at the next meeting next week.
Joy Wiltermuth, thank you so much.